Well, look, September 1st, they wrote about it the whole weekend. It's in a blog we put out there. It was mentioned. We wrote about it in that blog. It's all there for you folks to read.
Yeah, it's if anyone interested, it's on the TradeZero's LinkedIn page. I can put the link as well if anyone interested. Richie is posting every week, and it's being published on the TradeZero LinkedIn page. Sorry to interrupt you.
Yeah, no, good. And look, the idea is to be ahead of the curve. The idea, and I've written a market letter. I haven't written it for a very long time until TradeZero approached me to write it. Okay, again, it's called Floor Lines because when I wrote it and sent it to my clients all over the world, by the way, I had an office in London, I had an office in Switzerland, not to mention the domestic clients. And so the idea with writing a market letter is to be ahead of the curve, or else you're just like another jerk out there. And that's the last thing I am, is another jerk out there. So the stuff we're writing about early on is a perception, my perception of what the main things are going forward for the next week. And you will find by reading that more times than not, you're going to find some things that are very pertinent in there. Last week, Leo was here, Madeline was here. We spoke about the IWM. We spoke about the financials. And I mentioned specifically a number of times during last week's interview the importance of those two segments of the market. And then the second thing was that everybody was speaking about September, the worst month of the year. And it is. It's historically the worst month of the year. All right. So they built up this Monday morning puke, if you want to call it. If you haven't eaten lunch yet, I apologize. But this Monday morning puke was all pre-recorded because they built up this scenario and they worked people up into a frenzy. Oh, let me get out of this market. It's September. Okay. And it just picked up momentum from there now. All right. And you see that the IWM and the financials are very weak. And they continue to be weak. And to me, this market, and obviously the Magnificent Seven and semiconductors are weak, but you're not going to see this market turn around until you see the financials gaining traction again and the IWM. Technical areas are borders. And algorithms go to borders, and they go to the resistance areas, which is the top border, and they go to support areas, which is the bottom, and many support and resistance areas in the middle. And this is the way this goes. So, my sense is that, the market is not going to go straight down, and they're going to control themselves, get themselves back under control. Okay. But, it may not happen for a couple of weeks. It could be a lot of sideways type action until closer to the end of the month. I mean, this is why I'm not a long range swing trader investor. It's too difficult to beat this. The news of the employment report today, it didn't, let me back up a minute. I apologize. I'm moving a little too quick. Last night at the close was Broadcom, AVGO symbol. Broadcom, they're a chip maker. They gave you a lot of insight, give you a lot of insight into the AI space. This is why the AI stocks have been like, not doing much. But if you look at the AI stocks, Broadcom, disappointed. But did they really disappoint? Okay, did they really disappoint? The answer is no. They were not bad, the earnings. But, the news and you heard me speak about this, any of these sessions, not all of them, not every one of them, but speak about the relevance of the news. What is the relevance of the news? The relevance is less and less meaningful. Why? Because of all the factors involved in what a position is. If you think that the positions of today, relative to the amount of money they have under management, is not 10 million shares, it's not 2 million shares, it's not 20, it could be 40 million shares. So some of that position, these deep-pocketed investors, they don't just sit there. They don't just sit there with these positions without protecting a percentage of them. So that's why the news on these things, everybody's got a different reason for the stocks to go up or down, because there's so many other factors leaning against those numbers that it becomes, if put it this way, if the powers to be out there knew the Broadcom earnings before they came out, they would have loaded up. All right. And they would have got smacked around. Okay. Because you don't know the balance, what it is. You don't know. And the same thing with the employment report. It wasn't bad, but, they've been lying to the American public all year. There was 818,000 job revisions for the year as of last month. That means an average of 68,000 revised. Okay. So they're putting the numbers out there, and they're causing havoc by the market going up and down because of the numbers. And then a month later, they say, "Oh, those numbers weren't good." So they just roped in the whole investment community based on those numbers that were not accurate. This is the problem here. This is why, day trading to me right now is the best way to navigate this market.
But I think we should just focus on the technical analysis instead of fundamentals. Is that correct?
Oh, I totally agree. I totally agree with that. Take what the market gives you, put your head to sleep on a pillow at night, and don't let these people and all this noise they're creating havoc here on purpose. The algorithms are creating havoc. News event has been used as business appointment. Yeah, that's a nice way to put it. That's right. That's exactly right. That's the way you should be looking at it. That's exactly right. There's just you don't go all in on this news and the numbers that they're putting out there, because you don't know how it's coming out in the laundry, man. You just don't know. Good news is bad news. Bad news is good news. The employment report is this. The unemployment, blah, 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 blah. And all of a sudden, the big R word is being spoken about. Recession. Recession. Okay, yeah, that's right. Recession. Why? Because everybody's up to here in debt. Okay. Most of the American people, which is the economy is based on, is up to their ears in debt. I'm just generalizing this, but this is a good picture of what is going on.
Good point. The credit card debt in States actually the concerning.
Correct. It's huge. It's huge. And why is it huge? Because people are betting on hope, because the pundits out there are talking about the good times ahead for months. Okay. And the political atmosphere that's controlling everything by liars, basically. Okay. And so American people, the sentiment, they don't get it. They get it last. So what do? They all right, let's just, let's buy a new car, or let's do this, or whatever it is. They go into deeper debt is what I'm saying. And they go into deeper debt. So when they go into deeper debt, what goes on now when the wages are not going up, when inflation is not going down? What happens? They get squeezed more and more. All right. More and more. And the house prices are going down, by the way. The rent is not going down. The insurance premiums are not going down, especially in people in like Florida. They're killing those people with flood insurance, for instance. That's not going down.
Actually, I've seen a chart that showing yields 2 to 10 years. So now they say it's equal, and it's kind of like historically, I don't know, you have more knowledge on this, but historically it actually says us beginning of the recession.
Yeah, well, that's called an inversion, a 10-year and 2-year note.
Yes,
okay? Yes. It's called inversion, and it's setting up like that. It is setting up like that. But the market's got to get this out of its system. It's way ahead of itself, and that's what you're seeing taking place here. You can paint the picture any way you want, but the market was in, and still it's adjusted here, but still in nosebleed territory.
Yes, it's really a complicated situation with the AI booming, chips booming. At the same time, the economy is not that much on that way, but it's things are getting really interesting, especially we're heading to elections and the geopolitical events going on around the world. So pretty much interesting. So we have a question from Leo. Hi, Richie. What's the significance of a 500 tick chart? Why is it important? Do you get that?
I don't. I use 133 tick chart myself, and I think, and I also use 3-minute charts and 1-minute charts, and I'm mystified by people who look. If you want a longer term play, it used to go where if you wanted a longer term play, and I see that's one of your questions. If you wanted a longer term play during the day, you would want it to look at a longer term chart. Okay, so 15-minute, 2-hour, 4-hour chart. I don't get any of that. That's too much noise to me. Okay, I want the near term movement of the market is what I focus on. And people say, "Oh, whoa, you're a scalp trader." Scalp trader? I don't know what a scalp trader is. You want to see my P&L? You want to see my scalp trades? They're not 2 or 3 handles. They're 20 and 30 handles. If you want to call that a scalp trade, have a nice life. That's fine. Great. Enjoy yourself, because I don't know what they're talking about. I know what I'm talking about, and I can back it up with numbers. So I don't know what they're talking about. But the bottom line is this. You want to know what the near-term movement of the market is. If you're a deep-pocketed investor, well, maybe you belong, maybe you should trade like a deep-pocketed investor and buy and hold. And that's fine. It's not what I am. Anybody that's here, I suspect that's not why they're here as well. They're here to navigate the market, take advantage of what the market gives you, and ride off into the sunset. I mean, that's it. So, the near-term charts are going to tell you that. That's why I navigate my 1-minute charts. I have 1-minute charts, 1 minute, 1 minute, 1 minute, YM, ES, NQ. It doesn't matter what you're trading. The market can't do anything without those 3 charts overlaid by Keltner channels, 9 EMA, and the volume weighted average and the 200-day moving average. The market can't do anything in a short period of time without it being reflected first in those charts. The second group of charts I have are 3-minute charts. My most effective charts are the 3-minute charts. Don't think a scalp trade is 2 or 3 handles. I don't trade anything looking for 2 or 3 handles. I don't trade anything. Forget it. It doesn't mean I won't take 2 or 3 handles if the market turns after I'm in a position. Doesn't mean I won't take it if I see signs of trouble. But more terms than not, if a base runner in baseball is very fast, they're going to turn a single into a double. So sometimes the market is going to give you that double, but sometimes the market is going to give you that triple, depending on the entry level.
Gotcha. Thanks for that. Our topic is just let's kick off our topic. We've been talking about the markets a lot, multi-time frame analysis. So my first question, Richie, is how can traders effectively synchronize signals across different time frames to enhance their accuracy of their trade?
Yeah. I try to keep it as simple as possible. I find myself over the years, the more you open yourself up, master a smaller amount of activity in what you're looking at, master that, and then add a little bit here, add a little bit there as you master what you have. People are so quick to, they listen to this pundit, they listen to that, they listen to this chart, they have that chart. By the time you know it, they don't know where they're at, you see, because they make things too complicated. All right. I'm a big proponent in keeping it simple. Do I look across? I don't think I've looked at, I've deviated from a long range chart more than 3 times in the last 2 weeks, other than the charts I'm looking at. Okay. I don't care about a 4-hour chart. Doesn't matter to me. I don't care about a 2-hour chart. I'm not here to predict where a stock's going to be in 2 weeks. I don't care where it's going to be. Doesn't matter to me. I care where the market's going quick. I care that I can place the bet in the right entry area. I care that I take a good percentage out of it. I care about that. And I don't care about anything else. and I'll just do this all freaking day, all day. So the time frames to me, you know, if you're trading in that frame of mind and your ambition is to day trade, why would you want to look at a 4-hour chart? Why would you want to look at a 2-hour chart? I know people. I know smart people. Oh, I would never look at a 1-minute chart. Okay, it's fine.
That makes sense. And my next question, which is, what are the best practices for identifying key support and resistance levels when using multi-time frame analysis? What's your approach before you identify the support and resistance?
A time frame. If I see a discount area coming down and the market's here and coming down, I know the algorithms are going to that discount area. And if I also see that discount area is a major support area, I'm just going to close my eyes and buy that area right there. Because number one, I know the algorithms are going to go there because it's a discount area. So not only is it a discount area, not only do I have the algorithms figured out, but I know there's an important support area. Okay. What does that mean? Here, you want to read? Here, I'll read something to you. I'll read to my session before we started today. Here, 5519. 50. Now, there's something behind all of this, folks. You don't just make this up. I have some fake dots over there that somebody made and sent to me because I kid around that I put the Barron's timetable up there and throw a dart at it, and that's where we get these from. Well, ha. But anyway, 5519, a major resistance area from July 25th to July 30th. Last Tuesday and Wednesday, it was bopping up and down above that area. Support. All right. And between Tuesday and today, which was yesterday, once that 5519 area puked, that was it. That's why we're down here now. Okay. All right. And so here, I mean, I can just go on and on. These areas are historical areas.
So how back are you going in order to identify your support and resistance? Like, are you going back to a month or 2 months or like?
Oh, no. It depends on the area. It really does depend on the area and where the area is supported or is resistance on. Oh, I mean, I have different numbers here from, down to 53, 38, 42. So, I mean, and I have resistance areas up to 57 and change. So, it all depends on where these moves historically have taken place.
Okay.
But once again, I put them on my site for nothing. They're out there.
Are you using a volume profile in order to just identify those areas, or what's your techniques?
Say that again.
Are you using volume profile to determine those areas?
No, they're just significant areas that show up on the chart charts historically that are meaningful areas. Market open is a psychology game to me.
Asking prior levels.
Prior levels. Prior levels. I don't really, I'm well aware of support areas in the market, but the play I'm talking about prior to the opening, like a minute, 2 minutes before the opening on a mini puke. Listen, I'm going to play that if I feel like they're pushing it down to clear the way on the way up. In other words, they want everybody out of the way to create an up opening. And that happens so many times. If my 3-minute Keltner channel, by the way, my 3-minute NQ and YM charts overlaid by Keltner channels, if they're in the same bottom Keltner channel mode, okay, I'm closing my eyes and getting long for an up opening. And I'm going to feed it right in when they give me what I want. I'm not waiting around. I don't care if it goes up much higher than where I'm getting out. I'm just printing money like that. The play is over. Once I make that play, I take what the market gives me, and then I say goodnight and get back to the set position. So, prior levels, overnight levels mean something, but not so much on an opening play that I'm describing.
Okay. Thanks for that, Richie. We're coming end of our time for today. Would you like to leave us with golden? I know you gave us lots of golden nuggets, but do you have any final one?
Final one. look, they're going to scare people out. They could scare them more from here. They really could. The market is up in nosebleed territory. Yeah, they've hurt them, but it doesn't mean that it's over. It will be over. All right. They will gather to circle the wagons before this election. The worst part of the year, the worst part of the historical numbers regarding September and October usually occur in the last week of September and the first week in October. And so, having said that, I think it's a little early for this puke here. I think they're going to gather themselves, maybe today. All right. I think they're going to get it out of their system. I would look for, from here, I would look for, if I'm right, I would look for capitulation from here. All right. Maybe Monday, maybe this afternoon. Okay. All right. What is capitulation? Serious bars down with long wicks. Serious bars down with long wicks. All right. And you can look for capitulation like that. And then maybe then they'll put more money to work, because that's what the deep pocketed investors need to see.
Okay. Thank you so much for that, Richie.
What is your reset? I got another question here from Leo. Leo's been constant here.
Yeah.
Leo, what is your reset
once you're out of the trade?
Look, if I'm in a trade and my entry level is the right entry level, which is really the most important thing. It dictates your P&L. It dictates you where you make the trade. If you're too late on a trade, and it's up 2 or 3 handles and starts to get tired, but you should have been in 5 or 6 handles, it's the entry level that means everything. So when I'm out of a trade and it's working out very, very nicely, I'm just resetting my charts. I'm following that trade. I'm learning from that trade. Am I early? Was I too early? Did I give it away? Did I not give it away? Sometimes I'll jump right back in if I gave it away, recognizing it. It's all about letting the market show you more. The more the market shows you, the more intelligent play you can make. You let it give to you. That's why patience is huge. You need to have patience. Okay, because patience gives you time, gives you time to watch the market and let the market tell you what it's going to do.